6 stocks for 2025 Part 2. Number 4, Nike. Nike stock has had a poor couple of years. Under CEO John Donahoe, the company pushed too heavily into DTC and performance advertising. Relationships with retailers suffered and innovation declined. That opened the door to competition from the likes of Hoka and On Cloud. Nike profits have fallen 18% from their peak and margins have dropped under 10%. However, Nike is still one of the best brands in the world, and new CEO Elliott Hill has a clear strategy to put things right. Hill is a company lifer, having joined the business in the 1980s. He plans to repair wholesale, invest in brand storytelling and reduce promotions. Company guidance suggests that Nike results are going to get worse before they get better, but shares are down more than 50% now from their peak. So Nike stock could start to move higher in advance of visible results. It's not too late for Nike to turn things around, and the stock can have a much better year in 2025. Number 5, XFAB Silicon Foundries. XFAB is a small Belgian company that makes microchips for customers across a range of different industries. The company has had a difficult year as demand for electric vehicles has softened and microchip inventories have normalized since the pandemic. In the most recent quarter, XFAB revenues fell 12%, silicon carbide sales dropped 60%, and the company's industrial segment fell 41%. Gross margins have slipped 4% over the past 12 months as well. But despite the weak quarter and the weak year, XFAB has still produced 100 million euros of profit and 185 million of EBITDA. That means the stock is valued at under 7 times earnings and under 4 times EBITDA. The bull case is further supported by the company's long-term investment plan. Management is spending money on new facilities that it thinks will more than double group revenues by 2030. If XFAB gets anywhere near those targets, the stock should be a big winner. Number 6, WISE. UK company WISE is building a global payments infrastructure that is bringing down the cost of cross-border payments. Shares have increased 60% over the past few months, taking the company's value to £10.7 billion, but there should be more gains ahead. WISE's performance stems from customer obsession and excellent growth. In its latest half-year results, underlying income grew 19% to £592 million. Transaction volume grew 19% and active customers increased by 25%. Crucially, WISE still has plenty of growth ahead. Management estimates it currently handles just 5% of personal cross-border payments around the world and less than 1% of small business transfers. And the company continues to announce partnerships with major banks who are using WISE's payments infrastructure for their own cross-border services. The latest partnership was with Morgan Stanley just a couple of weeks ago. With £430 million of net income over the last 12 months, WISE stock trades at about 25 times earnings. That's still not expensive given the company's prospects. So those are 3 more stocks for 2025, and I own shares in XFAB and WISE. But these are my personal opinions, not financial advice. To see more investing videos, make sure to check out my website at 3minutebreakdowns.com, and Happy New Year.